private banking space in general. And two of the bigger banks, we have HDFC Bank and Kotak Mahindra Bank, both of them expected to report their numbers tomorrow. Abhishek joins in to tell us more about what the street is factoring in from both these big boys, HDFC Bank and Kotak. Abhishek.
Well, Mangalam, HDFC Bank had given a hint with respect to the business momentum, wherein the CASA has declined. However, liquidity coverage ratio has improved. So deposits were flat on a sequential basis. CASA ratio down by nearly 200 basis points quarter on quarter, and advances were down by 0.8% sequentially. So analysts are expecting net interest margin to remain flat. So Kotak Securities and Morgan Stanley, both of them are estimating net interest margin to be flat on a sequential basis at around 3.4%. Now, Philip Capital and Morgan Stanley estimates slippages to be at 8,000 crore versus 7,300 crore in the previous quarter, which is seasonal in nature. Q1 slippages are slightly higher for all the lenders versus Q4. So credit cost is expected to decline quarter on quarter. Morgan Stanley estimates 181 basis point decline in the credit cost on a sequential basis. Asset quality largely to remain stable. Again, we have Philip Capital that estimates gross NPA ratio at 1.25% versus 1.24% in the previous quarter. Now, we cannot compare the YOY numbers because of HDFC Limited's merger. So, sequentially, NI is expected to be up 1.7% YOY and PAT is expected to decline 5% on a sequential basis. Coming on to Kotak Mahindra Bank, the key thing to watch over there will be the deposit growth momentum that will be seen closely. Loan growth expected to remain healthy. So, loan growth as per Philip Capital is estimated to grow at 17.5% YOY and about 2.7% sequentially. Net interest margin as per Morgan Stanley estimate is expected to decline 34 basis point YOY and about 5 basis points sequentially. You need to watch out for the low cost deposit ratio, how that behaves. It has been on a declining trend for all the lenders. Last quarter for Kotak Bank, it was at 45.5%. Slippages are seen 1,400 crore as per Morgan Stanley versus 1,300 crore in the previous quarter. Seasonal in nature, asset quality expected to improve. So our poll suggests NI growth of 13.5% YOY and about 16% YOY growth in profits for Kotak Mahindra Bank. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's get in